Hello and good day. We're looking at NASDAQ 1-minute chart. This trade is basically set by the volume profile pivoted from this low to this high. Looking at 5-minute chart, we have equal highs and the liquidity in here. The first partial is taken. One liquidity at $684. Going to 1-minute chart, the price came short to that high, which is typical for NASDAQ. Sometimes it does that. And the POC shifted to 649. We have 1 wick. That's passive sellers in the market. And then we have full body bearish candle. Third candle closed bearish with a wick. That's where I entered 2 micro contracts, closed one of them partially here. Now it's time to move this stop to break even. Let's examine this trade with more details. I have more information to add to the chart. On the left hand side, I have a volume profile that is set for the previous trading day. The value area high is exactly where the price started to show reaction at $658. At the same time, when I saw the POC of this leg has shifted to the same price, on the third candle, I entered short order. Over here, I will monitor the price to see what's it going to do. Is it going to go higher or is it going to go lower? To go lower, I have 1 bullish candle, which the price has to respect this bullish candle. If these buyers are trapped, the price shall not close above it. And if this candle is a passive buyers in the market, the price shouldn't have closed below. So this is a good breakout. Now I can move this stop above this bullish candle. I'm aggressive with the stop because it is London pre-session. Over here we have 1, 2, 3 bearish candles. My final target like to be $575 or maybe the close $585. Let's see. I don't want to fight with these trap sellers because the price can potentially pull back. All right, that trade is closed. Now I will be monitoring this portion. This range, $621 to $609. This single bull candle. If that's a trap for buyers, the price should not close above it. If it does, I can use the mean threshold to go long. Furthermore, that's the new volume profile. Pivoted from $676 to $591. POC is here with 162 contracts. It is respecting these down close candles. If I see a close above it, that means it might not even get to 50% of this range. We're above the point of control. It has respected these down close candles. And I would like to use the upper portion of the box and 50% of it to place 2 orders. And in this scenario, I would like to target $684. The resistance or the feeding zone we spotted in the 5 minutes time frame. That's here. The first pending order is active. That order is filled, risking $100 to get $257 at least. This is a very good trade, A+ setup trade. I like this playbook. That's why I rather to enter the market with 4 micro contracts. On the other hand, we have 1, 2, 3, 4 bearish candles. Half comes at $645. A close above this will increase the probability of the trade to hit the target. Currently, the yellow line is very important. More conservative approach is to close partially in threshold, which is also backed by a fair value gap. First partial is done. It's closed. I move the stop below this down close candle. If this down close candle is a bear trap, the price shall not return below this. POC stands tall at 628. If I see many wicks in this portion, I might close one partial at the value area high of the previous day. I have 3 more micro contracts on. NASDAQ went above 50%, but we are having a long wick and a down close candle. I don't like this structure. This is an outside bearish candle, expecting these two up close candles. It came right to the half of this tiny bullish run. Therefore, over here, I would like to exit another micro contract at 50% of the leg, and I don't want to risk it. I will move my stop to break even, because currently this candle at this specific area is telling me we might have a reversal. My second partial is filled. Over here, the price did close above it. The profit is taken. I moved the profit to the same area and exited the trade, mostly because the price did not maintain its pace to go beyond $684. But this candle and these two tails is giving me the story of a continuation, maybe a new high. But as I said, I would like to remain my trades in a high pace market. So let's explain the short order and the buy order one last time, using the volume profile from this pivot low to this pivot high. A ton of volume came. The price came short to the key support, 29,684. That's right at the value area high of Friday or the previous trading day, which can provide a significant resistance to the price. I have wicks, but I don't see much of aggression. Aggression came in the market on this candle. Third candle, once I saw a new wick, I entered 2 micro contract. Stop was very tight above the previous down close candle, and we closed that order below this low. On the way back up, I have a chain of bearish candles and a bullish breakout. This breakout is legit because the up close candles remained with the fair value gap. This is the fair value gap. It is legit because on the way up, it did not return to that fair value gap until the London pre-session. Respected it. I have one up close candle, which is bull trap. NASDAQ closed above it. I used upper portion and 50% to enter long. First partial and second partial was at 50%. Second partial was because of this down close candle, which is also an outside candle right at the point of control of the day. I hope you guys like this episode. If you have any questions, please write down in the comments. I know this can be overwhelming and a bit complicated, but don't worry. We are going to repeat these episodes until we master price action and order book. Till next one, stay safe, stay observant, and always protect your capital with stop loss.